Welcome to the Deep Dive. Our mission today, it's the daily vibe casting. We're running through the trending posts across finance, tech, and, well, everything else. Think of it as your shortcut to being instantly well-informed. We're going deep on today's sources, pulling out the context, the surprising data, and what it all really means. Let's unpack this fast.
Yeah, and we've got a fascinating mix today. Lots of financial friction points, but also some really big technological pivots.
Absolutely. Okay, let's kick off with market mechanics. This post from @Farsiness, it just nails a common frustration. Why do banks always raise their price targets after the stock has run and not at the bottom before the run? What value are they bringing exactly? Can someone help me understand?
That is such a great question because honestly, the data completely backs up that feeling. There was research, I think back in 2021, that found something like 68% of analyst upgrades actually lag major market moves by over 10%.
Wait, 68%, so they're literally chasing the price.
Pretty much. It suggests they're confirming what happened, not really predicting what will happen.
So, what's the actionable takeaway here for listeners? Should they just ignore these targets?
Well, what the research really points to is that the analysts' incentives might be misaligned with pure prediction accuracy. If you connect it to the bigger picture, an SEC review actually found the main drivers are often generating trading commissions or, facilitating deals for corporate clients.
Ah, okay.
So that lag, it might actually be a feature of the banking business model, not necessarily a bug in their models. Use them as context, maybe, but probably not as your primary signal.
That makes a lot more sense. Okay, let's jump over to crypto. Speculative force is definitely amplified there. At Watcher Guru posted this just huge figure. Just in $22 billion worth of Bitcoin and Ethereum options expire today.
Yeah, that number is designed to grab headlines, right? But we have to ask, what does that massive notional value actually mean for the market like today?
Right.
Most of it represents what you might call paper bets, speculative contracts way out of the money.
So it's definitely not $22 billion actually changing hands or flowing out.
Exactly. Research usually shows the open interest, the amount that could realistically be acted on, is typically only, say, 10 to 15% of that big number.
Okay.
But the really interesting mechanism to watch on days like this is max pain. There was analysis back in 2021 validating that around 68% of crypto options expirations actually align pretty closely with these max pain points.
Max pain. Can you break that down a bit? That's pretty dramatic.
It does, doesn't it? Basically, the max pain point is the price level where the largest number of options buyers lose the most money. Conversely, it minimizes losses for the option writers, often the big institutions who sold those contracts.
So if the price drifts towards that point,
it suggests the big players might be hedging effectively, maybe even nudging the price towards their most profitable outcome for expiration. It puts a, slightly cynical spin on things.
A very cynical spin. Okay, speaking of pain, let's pivot sharply to macroeconomics. Got a sobering post here from @Unusual Whales. A third of U.S. states may already be in a recession per FT.
Yeah, we really need to look at this regional fragility. It's such a stark contrast to the, 3% national GDP growth reported in Q2 2025.
Right.
It shows the U.S. economy is kind of, split right now. Very uneven.
So where's that strain actually centered? And what's driving it?
Well, the map, which is based on Moody's data, suggests it's mainly driven by two things. First, lingering trade issues, tariffs from before, increased costs and hurt jobs, especially in agricultural states reliant on exports.
Okay.
And second, it seems tied to the homeownership crisis. The median age for a first-time buyer is creeping towards 40 now. That lack of housing mobility really seems to be amplifying recession risks in states driven by consumer spending, where people just can't easily move for better jobs.
Paints a pretty grim picture of that localized stress, but
okay.
Despite that, the speculative future seems bright for some assets. Let's pivot back to that hyper-optimism with @Bitcoin Magazine, quoting Eric Trump. Jane Eric Trump says he thinks Bitcoin will surpass $1 million, and Q4 of this year will be unbelievable.
Right. These kinds of really aggressive, bullish calls always make a splash. What's interesting here, though, is that this specific Q4 outlook does align with historical Bitcoin data. The fourth quarter has traditionally been its strongest period.
Okay, historically.
Right.
But that $1 million target itself, that's pure speculation, isn't it?
Yeah.
Does trying to tie it to something like quantitative easing give it any more real weight? Or is that just, convenient narrative timing?
I think it's mostly convenient timing. When you connect it to the bigger picture, comments like this lean heavily on that QE context. The idea being that increasing the money supply historically pushes money into risk assets, including Bitcoin.
Right.
So while QE might create the potential for asset inflation, suggesting it guarantees a specific huge target like $1 million, that feels more like promotional narrative playing on past market trends, not really based on current policy specifics.
Got it. Okay, let's shift gears from speculative assets to the real plumbing of global finance. This is a massive story crossing finance and tech from @Whale Insider. Just in, Swift working on stablecoin and on-chain messaging using Linea.
Yeah, this is potentially seismic. I mean, Swift is the absolute bedrock of international finance, right? Handles over 40 million transactions daily. And now they're actively testing Linea, which is an Ethereum Layer 2 network.
Wow.
It's basically legacy finance deciding to adopt crypto rails.
The scale of Swift is just immense. What do you think drove them to finally embrace blockchain tech after being, well, pretty skeptical for years? Is it just about making things faster?
Speed is definitely a huge factor, yeah. Cross-border payments can take days. It's notoriously slow. But this also feels like a strategic move, maybe following past sanctions that kind of threaten Swift's dominance.
Ah, interesting.
Linea uses something called zero-knowledge proofs, which offer the kind of transaction privacy regulators are looking for. And at the same time, it could potentially slash payment delays in that massive, like, €13 trillion market from days down to literally minutes.
So it's regulatory compliance, efficiency, and protecting their central role.
It is. Yeah, that's monumental. It really signals that even the most entrenched legacy systems are seeing that the efficiency gains from distributed ledger tech are just becoming too big to ignore anymore. They can't risk being bypassed by, new digital currency systems.
Okay, moving from the plumbing to the infrastructure builder now. The AI giant, Nvidia, at Amitis Investing, shared this really interesting contrast. Brad Gerstner, I believe Nvidia will be the world's first $10 tea company. Jensen Huang. People misunderstand what we do. We build chips, but Nvidia is really an AI infrastructure company.
Huang's clarification there is so critical, especially now their market cap just blew past $4 trillion. His statement reframes the whole investment case, really.
Think so?
Well, they're saying they aren't just selling high-margin silicon chips. They're positioning themselves as building the entire physical platform for AI.
But isn't that $10 trillion valuation maybe based on a slightly optimistic view that competition won't catch up fast? I mean, we're seeing AMD and others really pushing into this space.
Oh, absolutely. That's the central risk. But Huang's emphasis is on that comprehensive AI infrastructure play, deploying these massive multi-gigawatt data centers filled with millions of their GPUs. It's the broader ecosystem, the CUDA software, the networking, the data centers themselves. That's what they believe will sustain the kind of huge growth needed to justify those numbers.
They're selling the whole kit, not just the processor.
Basically, yeah. The shovel, the miner's hat, the map, the whole setup.
Building the whole gold rush town, not just selling pickaxes.
Yeah.
That actually ties back nicely to what you were saying about simplicity earlier.
Exactly. They're trying to establish the simplest, most integrated foundation possible, so these incredibly complex AI models can actually run reliably at scale.
Let's pivot to another huge infrastructure project, this one in space. An update from @SpaceX. Deployment of 24 Starlink satellites confirmed.
Yeah, another win for them. It just reflects that incredibly fast Starlink expansion. They're 130 countries now, I think, and aiming to handle maybe up to half of all global backhaul traffic eventually. It's a pretty amazing technological achievement, especially for connecting underserved areas.
It really is phenomenal tech. But this does raise that important question about trade-offs, right? The speed of this deployment is just wild. What's the friction point people are raising?
Well, the friction is increasingly ecological. There are recent reports highlighting growing concerns about the ozone layer, directly linked to the sheer frequency of rocket launches needed for this kind of constellation build-out. The amount of material being sort of ejected into the upper atmosphere. It means we need to take a critical look at the environmental cost alongside the technological win. Universal connectivity might come with an environmental price tag we haven't fully calculated yet.
Definitely something to keep thinking about. Okay, sharp turn now into consumer electronics and maybe a moment of design confusion. From @Andres Vidoza, AirPods Pro 3 are absolutely insane. I love them. but definitely mind-boggling how it doesn't have a EQ sound profile. Lol.
Right. It's this classic pro-level paradox. The AirPods Pro 3 just launched. They've got advanced stuff like immersive audio, even a pretty accurate heart rate sensor, apparently 95% accurate. It's definitely premium, specialized tech.
So why leave out something as basic as an equalizer, especially on a Pro model?
That's the million-dollar question, isn't it? It's baffling because studies consistently show that adjustable EQ can boost user satisfaction by like up to 30%, letting people tailor the sound.
Especially pros, you'd think.
Exactly, the target audience. Allowing them to customize sound for specific tasks seems like a no-brainer. Its absence suggests this weird design choice, maybe prioritizing a single standard Apple sound over giving users, especially pro users, control. It just seems like a strange trade-off that runs counter to what you'd expect for pro gear based on user preference data.
Okay, moving to something more philosophical for developers this time. From @DejaVuCoder, linking to an article about building simply. I recommend reading this link about the simplest thing that could possibly work.
Yes. This lines up perfectly with something called Gall's law. It's the principle that basically states complex systems that actually work always evolve from simpler systems that worked first. You can't really design massive complexity successfully from scratch. You have to build up iteratively.
So why do developers seem to need this reminder so often? What's the temptation to overcomplicate?
Well, there's often immense pressure, maybe from clients or just ambition, to over-engineer things right from the start. But what's really fascinating is the data. One study showed that deliberately adopting iterative simplicity, always finding the very simplest working solution first, actually reduces major project failure rates by something like 30%.
Wow, 30%.
Yeah. So this post reflects a kind of growing backlash, especially with new AI projects, against starting with these huge, sprawling architectures, instead of just getting a minimum viable product working first and then building on it.
Makes sense. Okay, next up, some really actionable advice from @Grigisenberg. He shared a simple image, basically showing how to break a big someday goal down into yearly, monthly, weekly, and daily steps. Caption? Simple but smart.
Yeah, this reverse engineering approach to goals is incredibly smart. We often focus on the big destination, but the real power comes from defining the specific, concrete actions you need to take, like today.
What's the psychological boost from breaking it down so much?
Well, according to the American Psychological Association, structured goal setting like this increases achievement rates by maybe 20 to 25%. And this method specifically emphasizes focusing on the one thing for each time frame, like the single most important daily task. A Harvard Business Review study actually indicated that kind of focus can boost productivity by around 30%. It just turns this vague future idea into a manageable what do I do right now task.
And sometimes that right now task needs to involve changing your headspace.
Right.
Here's a piece of personal wisdom from @AlexHormozy. You cannot heal in the same environment that got you sick. If you can't change your environment, change your environment.
Oh, there is extremely strong psychological backing for this. I mean, sustained exposure to really stressful environments, especially, toxic workplaces, it actively reduces your cognitive flexibility and just damages long-term well-being.
So for someone listening who feels stuck in a negative situation, what's the actual measurable impact of making a change, whether it's physical or just mental reframing?
Well, if we connect this to the bigger picture, research actually shows that proactively changing your environment, and that could be physically moving, or even just significantly altering your workspace or daily routine, can measurably reduce cortisol levels. That's the body's main stress hormone. Reductions of up to 23% have been recorded. And this resonates so strongly right now because we're seeing so many reports citing this rise in workplace toxicity across different sectors. Sometimes, the only real fix is getting out.
Okay, speaking of toxic environments and the limits of trying to control things, let's look at this reality check on legal agreements from @LulumZurvey. A regular reminder not to put any faith in NDAs, especially when it comes to employees. Employees maintain discretion when morale is high and there's loyalty to the founders.
Yeah.
If that breaks, there's nothing you could do to truly enforce NDAs, the world's most powerful companies.
This just brings up that fundamental question, right? Can a legal contract really override basic human loyalty or discontent? A study actually found that a shocking 68% of employees admit to breaching NDAs when morale is low.
68%?
Yeah, it suggests the legal paper is only really as strong as the underlying relationship.
But hold on, if an MIT Sloan study found only about 12% of NDA breaches actually lead to successful legal action, why do these huge, powerful companies even bother with them for employees? Is it just psychological theater?
I think it's largely deterrence and, yeah, psychological theater. The sheer cost and complexity of actually pursuing legal action against potentially many former employees, especially if the breach stems from widespread low morale, it's often prohibitive.
Right.
So the point of the post, I think, is that for genuine corporate security, trust has to be the foundation, not the legal doc. A loyal employee is always going to be more secure than a resentful one bound by paper.
Okay, let's squeeze in two quick hits before we wrap. First, this provocative social science observation from @NTFabiano. Firstborns have higher IQ than their siblings.
Okay, so what does this actually mean? There was a massive study, PNAS, back in 2015, that did find firstborn score on average about 1 IQ point higher. Just 1 point?
1 point, that's tiny.
It is tiny. The prevailing theory links it maybe to greater parental attention and cognitive stimulation in those very early years before you get what they call resource dilution with more siblings arriving.
Is this settled science, though?
Oh, far from it. Researchers are still heavily debating confounding factors like that resource dilution in bigger families, but also maybe subtle neurological risks linked to maternal health during pregnancy, changing slightly with birth order. So it's an observation from huge data sets, but the statistical significance is minimal, and the why is still really complex and debated.
Got it. Okay, finally, let's wrap with a bit of tech humor that actually carries a serious security warning. From @SFEAY, referring to a video apparently showing how to store all user passwords in a single database table to save space. Hopefully this helps.
Right, this is brilliant satire. It's targeting literally one of the most fundamentally insecure database practices you could possibly imagine. The joke plays on the dangerous reality of massive password reuse by users. The idea being an attacker could shrink the database if everyone used the same password.
And that highlights the very real vulnerability that password reuse creates for everyday users, doesn't it?
Absolutely. The humor makes a critical point about security. Reusing passwords is a massive risk, and it contributes directly to that staggering projected $10.5 trillion annual cost of cybercrime worldwide. So yeah, the joke is funny, but the threat it points to is incredibly real.
That wraps up today's deep dive. Wow, we've covered a lot from analysts lagging the market to Swift jumping onto crypto rails for the huge euro-dollar market, and even the practical limits of NDAs when loyalty disappears.
Yeah, the connections today really seem to highlight that constant tension, between radical innovation and the friction that inevitably comes with it. We saw it with Starlink's expansion versus those serious ozone concerns or that massive $10 trillion vision for Nvidia built on simplicity versus, well, baffling design choices and things like the AirPods.
So here's your final thought for today. Given that rise in reported workplace toxicity and the apparent practical failure rate of NDAs in those situations, what are the truly enforceable pillars of trust and security in modern professional life? Is it all down to culture, financial incentives, or maybe something else entirely? Definitely something to mull over as you navigate your own work environments.
Thanks for joining us for this deep dive.
We'll be back tomorrow with another one.